Hi everybody, it's AJ speaking. This is a review of AMD's second quarter results and how AMD compares against Nvidia. At time of recording, the market hasn't opened following AMD's after hours release of earnings, but you can see on this trading snapshot the stock is currently down over 5% to $165 per share in response to AMD reporting a set of numbers that was clearly below expectation. The goal of this video is to assess the investment opportunity in AMD, to answer the question whether is it now a good time to invest in AMD after this pullback, or whether the company is still overvalued. I will be making two videos. There will be part one, which is this video, where we analyze AMD and compare it with Nvidia. And then in part two, we look at valuation, discuss share price projection and price targets to see how much upside there could be if there is any. In this presentation, I will be going quite quickly to keep it nice and short. First, let's look at revenue. Revenue is up 32% year over year to 7.7 billion. I expect Nvidia to be up over 50%. My Nvidia forecasts have been highly accurate historically because I heavily leverage management guidance plus error correct. So all the Nvidia numbers I will be referring to are based on my outlook, which is heavily based on management's outlook, which has been quite accurate, although sandbagged in most cases. This gives us a timely comparison between these two giants in the AI business, AI infrastructure. Let's first review what was driving revenue. Management said revenue growth was driven by record server and PC processor sales. Is an important hint, which we'll be discussing in a moment. Management continued by saying, seeing robust demand across our computing and AI product portfolio. And management thinks they are well positioned to deliver significant growth in the second half of the year, which will be driven by the ramp of AMD's Instinct MI350 series and continued growth in the EPYC and Ryzen processor series. The trailing 12 months total revenue is up only 6.7% quarter over quarter to 29.6 billion. And you can see this in this chart. The last three quarters were pretty much sideways. In terms of total revenue, this is also clearly very different relative to Nvidia, which is growing like weeds quarter over quarter. So first point to note, clear difference in revenue growth between these two companies. Now let's look at a direct comparison. So again, the latest quarter for Nvidia is based on my estimate, represented in this presentation as a dashed line. The solid line is based on reported. And up here, you always see the multiple that emerges between these companies quarter on quarter. And in the current quarter, and please note, AMD and Nvidia have slightly mismatching quarters because AMD's quarter, for example, second quarter of 2025 ends in June and Nvidia's ends one quarter later. And I've been consistently matching the quarters that are closest together. That means we match this quarter, this Nvidia quarter that ends in June with the July quarter of Nvidia. However, I should point out, statistically, this gives Nvidia some advantage in an inflationary environment and in two growing businesses. But since the delta between these companies is so huge, I think that's a negligible inaccuracy introduced and it's hard to avoid. Also, what you can see on this chart on the right-hand side, you see the market value. This is based on last closing price, so based on closing price 5th of August, so yesterday, just before AMD published earnings in after hours. Nvidia traded at 283 billion. Nvidia traded at just over 4.3 trillion. So Nvidia is valued 15.4 times higher than AMD in terms of share price implied market value. But as you can see on this chart, revenue came only in 6.2 times higher. So if you just would look at in terms of revenue multiple, Nvidia would be vastly overvalued relative to AMD and would make AMD a great investment opportunity over Nvidia. But please keep watching this video because we have to cover some very important distinctions. But first, let's look at what was actually driving revenue. And there's some very important points to be made. So this chart shows you AMD's segments. AMD has the data center segment, just like Nvidia has. It has what it's called the client segment, which comprises the CPU and APU segment, the gaming segment, and then the embedded compute segment. And just real quick how you read this chart. So these percentages always show the year-on-year growth rate. The number with the dollar sign above each bar shows you the revenue amount for that quarter. So for example, here in this top chart, this shows you in gray the embedded compute. This contributed 0.8 billion in the second quarter of 2025. It declined 4% year over year, and the overall revenue contribution to the total revenue was 11%. This is where we can very quickly spot the primary segment, which is obviously in AMD's case a data center, which contributed 42% to total revenue. Now brought in 3.2 billion in the second quarter, grew 14% year over year, and was not AMD's primary revenue driver, as probably many would expect, given the still ongoing significant AI infrastructure boom. So how is it possible that it is not the number one segment in terms of growth? And you can see it down here. Down here you can see the absolute changes year on year. So data center added only 0.4 billion or 14%. Client added 1 billion, grew 67% year over year. Gaming outperformed data center, added 0.5 billion, up 73%. And embedded compute was basically flat. So the data segment wasn't even number two, or came in even only at at third place. So data center is clearly not powering the business right now. So that's the second key observation. So first one was Nvidia much higher growth, and then in the important data center segment, which is driving all this momentum in these stocks, we actually see very, very lackluster growth rates. And this becomes very clear when we look at this next chart, because this now compares just the pure data center revenue of AMD's with that of Nvidia. And you can see in that segment of the market, Nvidia totally, utterly outclasses AMD. So in the second quarter, AMD is going to deliver 13 times AMD's revenue. And slightly simplistically, you can think about this: Nvidia is selling 13 times more product. This just shows you that everyone wants Nvidia product and not AMD. And at this point, we really have to talk about kind of the genesis of these two companies. This is not like in the automotive industry, oh, AMD is like some startup, is just catching up, and Nvidia is the incumbent. No, it's the other way around. Nvidia is the younger company, has been much more innovative than AMD. And as you can see, in terms of revenue, for a long time, they were somewhat similar. But then Nvidia completely and totally pulled ahead. So that's a third observation. There's just an enormous execution delta between the companies. And this is kind of a soft factor which is hard to measure. I mean, you can see it in the numbers, but it's not directly measurable. But what we can say is Nvidia simply does certain things a lot better than AMD. Otherwise, you cannot explain this performance delta. Next, let's look at gross profit. Gross profit, and there were certain one-off effects we'll be discussing later. But they had to do with the US government's exports control, which significantly affected this quarter, because unlike Nvidia, which recognized the impact in Nvidia's case of the H20 ban, in the first quarter, AMD's main impact was recognized in this quarter, in the second quarter. And this caused gross profit to grow only 7% year over year, and was down 18% quarter on quarter to just under 3.1 billion. On the other hand, because Nvidia already recognized in Q1, I expect Nvidia's second quarter to be up over 50% year over year. Here again, in terms of gross profit, Nvidia completely outgrows AMD. But of course, there's this large one-off item. But later we'll be discussing adjusted net income, and then later also about adjusted forward earnings. And you will see that Nvidia just completely outclasses AMD in that metric. But again, this doesn't mean AMD is a bad investment, because ultimately, as we looked at earlier, Nvidia is worth 15 times more. So of course it needs to be a lot better. So the ultimate question is on a relative basis in terms of value. Where is the better investment opportunity? And this we'll be discussing once we get to the valuation section. So now on this slide, you see the direct comparison between the gross profit, Nvidia's gross profit over 11 times AMD's. So a huge delta here. But again, not a 15 times like the valuation difference. So we need to drill deeper to find out what's going on. Also, gross margin came down. Again, this was due to these one-off effects that AMD booked in the second quarter. Gross margin came in at 39.8%, which is an outlier. Here, this gross margin comparison between AMD and Nvidia makes it very clear. So you can see this massive dipping in Nvidia's gross margin in the first quarter, again, because Nvidia recognized this one-time hit in the first quarter, and then 1 quarter later AMD did the same. That's why you see this massive dip here. But the key point here is by this comparison of this gross margin, even in a really bad quarter where Nvidia had to recognize a huge one-off hit, it still delivered a much better gross margin than AMD ever delivered. So Nvidia just is fundamentally significantly more profitable in relative terms. So every dollar of revenue in Nvidia just goes a lot further than in AMD. Next, let's look at operating profits. Operating profit was actually loss-making in the second quarter. AMD lost 130 million. Again, this was due to large write-offs. And the other thing you have to keep in mind when you look at AMD unadjusted numbers, there's a massive amount of amortization of goodwill from a large historic transaction. And that's why analysis of AMD's GAAP numbers is actually not that helpful. But let's still compare them against Nvidia, because AMD was loss-making. We cannot really calculate a multiple between the two companies, but the most recent multiple was Nvidia outperformed by over 27 times AMD's operating profit. But again, these GAAP numbers are significantly affected by all these amortizations. So we move on. Here's the operating margin, same story, significantly depressed by all this amortization going on and other things. And in the second quarter, the operating margin, because it was operating loss-making business, was negative 1.7, came down sequentially from 10.8%. But again, all not that meaningful. Then when we look at operating margin, there's like a huge gap between the two companies, and this is significantly driven yet again because this constant significant amortization of goodwill and AMD's fundamentally significantly lower profitability. I mean, Nvidia's is just incredibly high, but has been for many years now, in the 50s, high 50s, and even 60s range, which is crazy. Now let's look at adjusted net income. Here, this is where it's more interesting, because when you look down here at the non-GAAP adjustments, we take out, first of all, share-based compensation, but then we take out all this annoying amortization stuff. So we get to a better underlying number. But there was a large one-off charge AMD did not adjust for in the adjusted number. That is a call a CFO typically makes. I think it's debatable whether they should have taken it out. I probably would have. Nvidia did in their case. But anyways, it is what it is. So reported adjusted net income came down 31% year over year, down 50% quarter over quarter to just under 800 million. So then when we compared it to, this then drove a 33 times outperformance of Nvidia over AMD's. Again, this is based on my expectation for Nvidia's second quarter results. But again, it's highly unlikely I'm off by a meaningful amount, unless there's a large one-off item that right now nobody knows about. But the point is, even if it's just 25 times, it's still huge. And if you look historically, that multiple tended to defend over 10 times for now over 2 years. And when you look at the long-term trend, you can see AMD's trend is really sideways. So when you look down here, AMD's earnings have basically been flat for the last 3 years. Now let's look at margin. So this adjusted net income margin, again, this adjusts for a lot of stuff, especially this amortization annoyance. And you can see that the adjusted margin is not all that impressive. It's just when there are not large one-off items, it's just around, let's call it the 18 to 23 times range. Second quarter came in, again, because it's a large one-off item AMD is not adjusting for, at just 10.2%, which is a multi-year low. But typically AMD would be more around 21, 22%, which would be good for a lot of companies. But once you start comparing it with Nvidia, and this is what this slide does, you realize it's actually quite disappointing. Even during really bad quarters, as you can see in last quarter, Nvidia generated more than double the margin than AMD generates in the very best quarter. And before we move into valuation considerations, I want to discuss some strategic points. And for that, I think it's useful to look at R&D spend. So this blue line is AMD, this green line obviously Nvidia, and you can see latest R&D spend for AMD came in at 1.9 billion for the second quarter. That's a all-time high. Nvidia's R&D spend, and this again is based on guidance provided by management, so this will be highly accurate, will be 4.4 billion. So Nvidia spends 2.3 times more on R&D than AMD. And given that the smaller company Nvidia historically then outperformed the larger company AMD and then created subsequently a ginormous gap, basically demonstrates that one should not assume that one R&D dollar goes further in AMD's case than it goes in Nvidia's case. That would be, I think, an assumption you cannot defend simply based on track record. With its R&D budget, Nvidia was simply able to make more attractive products for customers. So if we just assume for now that each R&D dollar goes the same distance, it will be very hard for AMD to catch up technologically with Nvidia. Of course, it's certainly possible, but based on kind of the trends of these companies, what these companies spend on R&D, it appears highly unlikely. And when you look at this trend curve, Nvidia is really ramping up. And also keep in mind the product cycles in Nvidia, they're multi-years. So when they launch one product, they're not just starting on the next product generation at that point. They've been developing in the upcoming product generation for many years. So we see this massive spike in Nvidia's R&D spend. The fruits of that in terms of products that end up with customers, we will only see in a few years. Since I promised to keep this one short, let's move on to now valuation. Let's first start with LTM implied multiple. LTM stands for last 12 months. So this is based on actually reported earnings, so there are no estimates. This is for investing valuation purposes is not a useful multiple. However, it's useful to look retrospectively at stocks to assess how much over or undervaluation occurred in the stock. Because unlike analyst estimates, there is no estimation error, no excessive bullishness or bearishness. This provides a good baseline. But again, because it's not forward-looking, and valuation is always forward-looking, it's not useful to come up with an investment thesis. But let's look at what we can learn from LTM multiples. So first of all, the blue line again is AMD, the green line Nvidia, and you can see for several years, AMD was significantly more expensive than Nvidia. And I think what happened is there was like a multi-year kind of, oh, I missed Nvidia, I buy in what looks like the second best thing, AMD, it looks cheap relative to Nvidia. That was going on. So a lot of people, I think, blindly bought AMD based on this simplistic and flawed logic that I see applied constantly in all kinds of names I cover. And what people didn't realize, this exposed them to significantly higher risk and huge loss of returns. So when we look at it, for example, in March 2024, stock traded at just under 80 times last 12 months earnings. So it's crazy. Nvidia only got to 50 times. But then ultimately after kind of quarter after quarter of disappointment in AMD, I think investors slowly start to wake up and realized, oh, it is really hard for AMD to compete against Nvidia. And then this flawed logic was slowly priced out of the market. But then what we saw, basically, the stocks then aligned and traded at very similar trading levels. But that alignment only occurred around December 2024, so not that long ago. And since that alignment occurred, Nvidia then slightly traded ahead of AMD, but really not all that much. And before last night's after-hours sell-off, AMD and Nvidia traded almost at the exact same LTM multiple. Both companies just over 50 times. So that's the end of part one of this AMD analysis. As I said in the beginning, in part two, we and try to figure out whether now is a good time to move into AMD, wait, or whether you should sell. But this is a video I will only share with subscribers. because I need to retain some value for them. Otherwise, it makes no sense for them to subscribe to my research. So if you listen to this and you haven't subscribed already, my subscription costs close to nothing, but it might change your life. With that, thanks for listening. See you in the next one. Bye.